Hello and welcome to this special edition of Indianomics. I'm Lata Venkatesh. What we are studying today are reports that the Reserve Bank of India has warned the Finance Ministry that the Pradhan Mantri Mudra Yojana scheme may turn out to be the next big source of bad loans. This report from IANS, or the India Abroad News Service, says that the spike in bad loans under the Mudra Yojana has risen to 11,000 crore rupees out of outstanding loans of about 2.5 lakh crore rupees. The RBI's caution comes at a time when the banking system is already reeling from the aftermath of the IL&FS crisis and, of course, the tail part of NPA loans. The Mudra Yojana, of course, is the NDA government's flagship scheme to support small and medium enterprises in the country. It basically involves a credit guarantee from Mudra Bank, that is from the government. So, what is the extent of the problem? Is the Reserve Bank right in raising the red flag, or are the fears overstated? Joining me to address this are S.S. Mudra, former Deputy Governor of the Reserve Bank of India and a former commercial banker of probably 40 years vintage. Renu Kohli, an well-known economist from Delhi, and B.P. Sharma, former Executive Director of Bank of India, are also joining in. Gentlemen and lady, thank you very much for joining me. Mr. Mudra, if I may start with you, sir. What we have heard from banks is that the Mudra Yojana started in FY15, and with each passing year, the targets have been raised by 15 to 20%. Now, year after year, when these targets come, bankers told us that it becomes a fight to reach that target, and therefore there could be a problem of diligence. Do you think that this is a fair complaint, a fair fear that banks are raising?
Thank you, Lata. First of all, I mean to say, of course, I would surely comment on the point raised by you. But in fact, this so-called report from RBI and articulating the certain percentage or amount, at least I have failed to see that where is this kind of report other than the media commentary on this. So really we are doing this discussion, at least you can certainly inform me without really knowing what exact is the contour and contents of this report, which is flagging concern around the Mudra scheme. But having said that, that we can come little later. But yes, fact remains that this danger or this problem of overreach is always inherent in any kind of a scheme which is purely target driven. I think in the long history of banking, we have seen this kind of problems coming from time to time. In the old days, it used to be the IRDP. And even if we look at the agriculture targets, which keeps on increasing from time to time, the similar kind of problems do emerge. The very fact remains that if the overall credit growth in the system might have been in the single digit, I mean, at one time even in the lower single digit, and then the other segment, the growth rate of 15 to 20%, when it is, kind of mandated target, may create problem. But I would just like to, add one qualification to what I am mentioning. MSME is a big sector, and it is a sector which has the potential of good growth. So, at times problem lie on both the sides. If there is a target and the race is just to achieve the target without really creating the capability of picking up the right candidates and assisting them in right manner, then I think it can be a very different picture. Problem comes from this combination of both sides, that there is one side there is a target, but other side the compliance with the target is being sought to be done in the most expedient or easy manner. I think this combination creates the problem rather than simple one fact of being target there and being unable to meet it.
Okay. Mr. Mudra, let me point out to another set of figures. The latest financial stability report of the Reserve Bank, on page 39, specifically points out to the performance of public sector banks in the MSME sector. The numbers which they show indicate that for the latest year, FY18, the MSME NPA percentage is 14% for public sector banks, whereas it is about 4% for private sector banks and about 4% for NBFCs. Now, on top of this, the targets for Mudra loans can't be given to private banks, obviously, because, you know, they're more minority. I mean, it is more board-driven. So already the data indicates that public sector banks have a problem being able to govern the quality of their MSMEs, and then on top of that, more targets are given to them. Then, you know, even if you don't have numbers, even if it is just an IANS report, on the basis of the RBI numbers, and on top of the fact that these targets have been imposed only on PSU banks, is there not a recipe for problem?
No, I agree. I am not denying the fact, but I think it brings back to the original point which I was mentioning, that it is you know, largely it could be a problem of right selection also, and figure themselves are what you mentioned. You know, I think at the latest count, the NPA in public sector bank is 15.2%, if I recollect correctly.
Yes, sir.
And in private sector bank, it is something like 3.9%.
Yes.
NBFC I won't include, because the model of NBFC financing to MSME is more on the security based kind of thing, rather than a cash flow finance. So that we can leave out. So that exactly is the point, that, you know, MSME is a sector which is growing well, which has the growth potentials, and there could be right candidates. I think the need is, if we are selecting things as a niche segment, there is a need to create the capabilities in the system, right use of the technology, right use of the market intelligence, and timely and right dose of credit which is to be given, then, you know, this kind of problem would not come. So while you know, if we say giving the target is largely contributed to this problem, then let's try to understand that Mudra is of recent origin. The total outstanding in Mudra and disbursal from the public sector bank, while it has been significant, but I don't think that Mudra alone could, you know, impact the overall NPA percentage in MSME. So I think we need to separate these two issues.
No, that's a fair point,
It means basically in the whole area of MSME, financing itself, there is a need to have a relook at the whole way of financing as to how you do it.
Okay, I'll come back to you then for prescriptions, sir. But yeah, I take your point that it's no one's case that it is because of Mudra that, you know, the old number of 15.2, as you point out, has been created. But Mr. Sharma, let me come to you. I spoke to a bunch of bankers after we read this report, which, as Mr. Mudra says, is a report without hands and legs. It is just an empty statement that the RBI has red flagged. But the bankers said that, you know, for a young portfolio like the Mudra portfolio, FY15, they have started giving the loans. And by FY17, the first trends of NPAs start coming out. And already now, with just 2 years of, you know, the NPA cycle starting, it is as high as 7%. That is the number that the bankers gave me. Would you worry about, you know, Mudra being the source of the next set of bad loans?
Well, see, traditionally, MSME sector, the delinquency percentage was not low. But it looked low because of the large segment credit where delinquency rate went up. But when we are discussing NPA, I think we are discussing in a wrong way. NPA in a Mudra account is an effect, it is not the cause. Nobody is discussing the cause. A micro unit to come up needs 5 things. 1, entrepreneurship skill. 2, a robust technology. 3rd, availability of cheap skills workers. 4th, finance. And 5th is a market. Market to sell the products. The general presumption is, in our country, the micro units are not coming up because the only limiting factor is they do not have access to bank credit. Now, if with this we have our strategy, fixed target, obviously the delinquency rate will go up. Absolutely no doubt about that.
Okay.
You look at agriculture, the kind of intervention support has been made, be it subsidized seed or subsidized fertilizer, free water, free electricity, and MSP. In spite of that, we have problem in agriculture because of irrigation.
Yeah.
So it is in the interest of country that micro units become more successful because it has a series of advantages.
Okay.
But without the intervention in other area, we just drive the public sector to achieve the number, we will end up with NPA numbers.
Okay, all right. No,
And
but
probably
do you agree?
CGT,
No, I take a point. I take a point, Mr. Sharma, entirely. But since you have been so close to the problem, you've just only recently retired. I'm asking you if you could smell this whole thing as throwing up a lot of problems. You were present when in the banking system when this program was launched. So are you getting a feeling that the way the targets have been scaled up 15-20% every year, this was a recipe for problems?
See, there is something else. This account came with a CGT guarantee.
Okay.
Now, the bankers, especially the down the level branch managers, were reluctant to sanction small loans for obvious reason.
Yeah.
Now, in order to make them comfortable, this guarantee scheme came. Looking back, I think this guarantee scheme might have provided a little bit comfort level in branch managers, which probably is now showing different consequences.
Okay. Fair point.
You look at NBFC, they do not have CGT coverage.
Yes.
And their loan accounts are not becoming bad.
Okay.
And the interest rate is much higher. But question is, a country like us needs cheap credit, but unless the other logistics are in place, we drive only bank credit, the very purpose will be defeated.
Okay, I take your point. Because the guarantee was there, probably the diligence also fell. That's a possibility.
I won't say diligence. I won't say diligence, but maybe that comfort level sometimes.
Okay. Okay. Renu, you are an outsider to this entire, process because we have two veteran bankers discussing it. But, you have been a veteran witness to this cycle repeatedly. What is your take? The scheme may have started with the best of intention, but probably this is not the way to go about it, you would say?
Yeah, as an economist, my perspective would also to be taking into account the macroeconomic picture, the aggregate picture. And I'm sure the regulator, that is the Reserve Bank, would also be thinking, that's where it's coming from when it's sounding an alarm as reported. So, the backdrop in the last 2 years is that we have seen growth decelerating. It's also the case that in that context, disposable incomes, per capita incomes, and net financial savings have been decelerating. So that's the macroeconomic picture on the one side. On the other hand, on the other side, we see as far as the financial sector is concerned, or more particularly, the credit cycle under the Mudra scheme is concerned, there is a very rapid acceleration. So I just took down some numbers as reported in the newspapers and in an answer in the parliament in response to a query, Lok Sabha question. And it seems that the total pace of increase in Mudra loans in FY17 was about 31.4%. And on top of that, the next year, it rose 41%. So, from 1.8 trillion to 2.53 trillion. Now, on one hand, you have a growth cycle decelerating. On the other hand, you have accelerated credit being dispersed, no matter the stress in the MSMEs or whatever. As an economist, I would look at that. And those two things would always, as a regulator or as a policymaker, I would definitely be cautious.
Fair point.
Now, of this increase, the total pace of increase from the public sector banks alone has been 21% in 21% of the total loans given out was 40% close to in both either last 2 years were by public sector banks, and their own lending to Mudra under the Mudra scheme increased 21% in FY17, and in last year the increase was as much as close to 29%.
Okay.
So, you know, and on the other hand, the numbers submitted for PSB's NPAs outstanding figures were FY16 596 crores, and that jumps in FY17 to 3790 crores, which is, if it's correct, then it's a 535% increase in 1 year.
Oh.
On top of that, in FY18, the amount mentioned is 7277 crores, which is again a 92% increase.
Oh.
So as a regulator, I would worry. As a policy maker, I would worry, because, you know, growth decelerating and a rapid acceleration in credit, no matter what the segment is definitely warrants caution. I would say that.
Okay. Well, these are telling numbers, and thank you for putting it across. We will certainly put them across as a table. These are big jumps in the rate of growth of credit under Mudra scheme, and a big jump in the generation of NPAs as well, even though it's a small base, and therefore it looks exaggerated when you put it that way. We have to take a break. We are coming back and discussing whether things can still be mended. We have been discussing this issue with Mr. S.S. Mudra, former Deputy Governor of the Reserve Bank of India and a commercial banker of 4 decades. Renu Kohli, the economist from Delhi, and BP Sharma, former Executive Director, Bank of India. Mr. Mudra, you know, before going to the break, Renu Kohli put out a very simple thesis that if the economy has been slowing from FY15 onward, especially credit growth, and credit to MSMEs is growing, that obviously makes the regulator worry. Why should credit grow so much when growth itself has been, slowing? In addition, there were 2 big problems that MSMEs would have faced. 1, because of demonetization, and 2, because of GST introduction, which kind of set a cat among the pigeons. What would you say should be the way forward? Should we stop targets? I mean, in what other way can you encourage credit to MSMEs?
Yeah, Lata, 2 points. Number 1, we come back to the original point which I mentioned, that we are discussing some of these things in absence of really the full set of relevant data. I heard to Renu. See, as on March 18, I think the total disbursal under Mudra was 5.43 crore, our total outstanding. And if we take this year, probably up to now, this is something like another 1,70,000 or 1,80,000 crore of disbursal or sanction which has taken place. Now, if we put together this figure of around 7.5 lakh crore, and the reported figure which everyone is talking about is the 11,000 crore of NPA, then I don't find really these 2 figures matching and coming out as a very high percentage of NPA. That is 1 point.
Yeah.
But as I said, we are discussing few things in absence of really meaningful data.
I agree.
But
so actually, I can help you with one set of data, sir. A couple of very reliable, top-notch bankers I spoke to said that it is running at 7%, which they thought is high, considering it's a young portfolio.
Yes, that exactly is the point, that what we need to understand, that while the percentage in absolute terms may look not very high or even less than the total MSME portfolio, but the pace of increase in NPA over a period of 3 years, and if it is coming with that at 7%, is certainly is a cause of concern, needs to be looked into it. But let us understand 2 more things. Number 1, Mudra is an integral part of MSME. So, to separating these 2 as a very different sector would not be right thing to do. As a matter of fact, what I apprehend, that a number of MSME accounts which were being financed in any case are probably getting grouped under Mudra or christened under Mudra. Yeah. So, if we take the total growth of MSME portfolio, and if a good part of that is being categorized under Mudra, then while the overall portfolio credit growth may not look so big, but the Mudra credit growth will look very big. We need to understand that. Okay. So 2 things we have to be careful. Number 1, what had been the pace of NPA accretion. Number two, within Mudra there are three categories. You know, that Shishu, Kishore and Tarun.
Yeah.
And the problem with the target driven approach, which I was, you were mentioning, and I would like to comment on that. The problem is that if target is in, number of units, and there would be a tendency on the part of the banks to meet the target while keeping the financial outlay low and try to put maximum number of cases under the Shishu category, where the credit dispensation is very small. Now, it is not really catering to the exact need of that particular entity, and it is then the recipe for account getting into NPA. So these are the kind of things we need to understand. Also, couple of things that, if you look at the disbursal under Mudra, is not that the PSB disbursal had been very high. I think it is less than 50%. It is less than their market share of the asset book. So not that the PSBs have done very high disbursal under Mudra, but despite that, if their NPA percentage is high, it goes back to the whole method of financing and also this tendency to categorize at the lowest level possible. That I think that need to be addressed. As far as the point made about the ecosystem and the marketing arrangement, I think if we look at the outlay in the unit, these are typically the units which produce local, sell local. So while those problems are, those issues are relevant, but not so much relevant for functioning of a typical SME or Mudra unit. That is what my take would be. So I think the sector is still, there is a large uncatered credit demand in this sector. It can really provide a good opportunity of growth, but you have to go with the right processes and a right mindset. Then is a potential sector. I still hold that belief. Okay.
Unfortunately, we are running out of time. So very quickly, Mr. Sharma, one unmet need of the MSME sector is that very often the large companies don't pay their bills on time. So the TREDS exchange was something that people were looking forward to. You think that could be a very big solution if it is made compulsory that all listed companies should be on TREDS?
It does not hold much relevancy so far this Mudra accounts are concerned. Mudra accounts is something locally produced and locally consumed. Only thing is, I told technology because Chinese toys we are still using. We do not have any robust technology. We are not addressing that. How many papad units will set up?
All right. Okay, actually, I'm really sorry, but we are running out of time. Mr. Sharma, Renu, last thoughts from you?
Yeah, I mean, I would say that, I agree with Mr. Mudra and Mr. Sharma on the points that they have made, largely about targeting loans and etc. As far as numbers are concerned, I would just like to clarify, this was the Parliament answers which were reported in the Indian Express on January 2, 2019, quoting the Ministry of the Finance, I think one of the state finance ministers of state for finance in the Lok Sabha. And last of all, the time versus, 3 years old and the pace of NPA increase. But I think it's also important to look at the cross-section dimension, which is that the public sector banks do trail behind the others who are also engaging in Mudra loans. And that's something to be reckoned with.
Okay. Yeah, I agree. We don't have enough time to discuss it, but it is very clear that setting targets perhaps is not very helpful, and setting targets in terms of number of units could also create problems, as Mr. Mudra is pointing out. Perhaps, we are going to see a bigger problem because the new MSME package from the Reserve Bank also allows banks to restructure these loans for the next 5 quarters. So perhaps the can is going to be kicked for another 2 years, and we will know whether this is a good or a bad scheme only perhaps 2 years down the line when the restructuring ends. Mr. Mudra, Renu Kohli and Mr. Sharma, thank you very much for participating in this discussion.